Welcome to this crypto trading masterclass, where I'll guide you step by step from picking your first coin to deploying advanced strategies that turn wild market swings into reliable profits. I've been inside the crypto market for more than 6 years, and today you'll get the exact blueprint I used to become profitable on crypto. Whether you're brand new or you've made a few trades already, by the end of this video you'll have a bulletproof roadmap for trading success in 2025. So let's dive in. First, let's dive into what a cryptocurrency is. At its core, it's a digital currency secured by cryptography. It operates on blockchain technology, which is a decentralized public ledger that records all transactions across a network of computers. Unlike traditional systems, there's no central authority like a government or a bank. Instead, every transaction is transparent yet encrypted, balancing security and privacy. Imagine blockchain as a shared, tamper-proof record book that everyone can view, but only update with a collective agreement. That's been a quick overview of what a blockchain is. Now that you know the basics, let's explore the main use cases of cryptocurrencies. First of all, it can be used as a store of value. Bitcoin is often dubbed as digital gold for a reason. With its limited supply and decentralized design, it's built to retain value over the time, acting as a shield against inflation and currency devaluation, much like gold has been doing for centuries. Most of you may don't remember that in the past, dollar was a paper representation of gold, but then Nixon eliminated this pattern. Then another use case for crypto is decentralized finance. Here, cryptocurrencies transform into digital money. Platforms like Ethereum, Solana, and Hyperliquid power smart contracts. They are self-executing agreements that run automatically when conditions are met. This enables trustless financial services, cutting out middlemen like banks or things like loans or trading. That makes things much easier and also much cheaper because, as I said, there are not middlemen that are taking their commission for each work. And then the third use case for crypto is stablecoins. You might have heard about USDC and USDT. Those cryptocurrencies are pegged to stable assets, like in this case the US dollar. As I said, USDC, USDT, those stablecoins deliver the reliability of fiat cryptocurrencies within the blockchain world. It's like combining the stability of the US dollar and the innovation of the blockchain technology. They are perfect for everyday transaction or DeFi applications, offering crypto's benefits without the wild price swings that we have seen historically on Bitcoin, Ethereum, or other kind of cryptocurrencies. You have to keep in mind that, for example, in 2022, Solana went from $200 to even $20. That was a really huge price dump, and there's a lot of investors and people that don't want to be that risky putting their money on certain amount of cryptocurrencies. Now you know the basics of cryptography, and I have to explain you why I think that cryptocurrencies have a really massive potential in 2025. So let's move on why, on my opinion, cryptocurrencies have enormous potential, especially 2025. A key factor here is currency devaluation. For example, the US dollar has lost the 97% of its purchasing power since the early 20th century, and the massive money printing during the pandemic and also the Silicon Valley Bank crash has accelerated inflation. This makes assets like Bitcoin or gold with fixed supply attractive as a hedge against inflation. Another important point here is the shift in reserve currencies historically. We have seen dominant currencies pass from Portugal to Spain, then to the Netherlands, and then to United Kingdom, and now the United States. Today, there are potential rivals, like in this case China or Saudi Arabia, that could threaten the dollar status. And we have seen that, for example, the BRICS nations are actually willing to make a new currency backed by different assets, like in this case gold, gas, and others. Those things can be a threat for the US dollar dominance in the global space. For example, cryptocurrencies you have to know that cryptocurrencies are decentralized, so they offer an alternative not tied to any nation. That could be the future. Now, let's compare gold and Bitcoin, because gold has been a store of value for centuries, but it's opaque, you cannot program anything on the gold, and often centralized. Bitcoin, on the other hand, it's easy to verify, fungible, divisible, scarce, with a 21 million coin cap, programmable and fully decentralized. You have to keep in mind that as of May 2025, Bitcoin's market cap is approximately 2.16 trillion, while gold it's around 22 trillion. If even a small portion of gold's market cap flows into Bitcoin, it could significantly increase its price. For example, if Bitcoin captures just the 10% of gold's market cap, that could add another 2 trillion to its current market cap, potentially pushing its price above $200k per Bitcoin. Additionally, some analysts predict that Bitcoin could reach prices between $150k and $200k by the end of 2025, especially with increased institutional adoption and its growing role as hedge against economic uncertainties. Okay, so now let's dive into some cryptocurrency fundamentals that you must know, because understanding key terms is crucial for you to navigate this space. First of all, you have to know that there's two ways to operate here. Centralized exchange, like in this case Bluefin, which are platforms where you can buy and sell cryptocurrencies with fiat and other cryptos. They are often regulated and makes your crypto onboarding much easier. The bad thing is that they are currently run by a company and they are not decentralized. On the other hand, we have decentralized exchange, like in this case Hyperliquid, that allow peer-to-peer trading without intermediaries or even perps trading. The bad thing about those is that they got big entry barriers in terms of crypto knowledge, and you must be someone with a certain level of crypto know-how to use them correctly, because otherwise you can get lost so easy. Then you probably heard about tokenomics. Tokenomics refer to the economics of a token, including its supply. Key metrics are circulating supply, maximum supply, and full diluted value, which can affect the token's price and investment potential. So it's crucial for you to understand how to read a tokenomic paper before investing, because tokenomics can give you a lot of information about the token's inflation. And as we have seen on the US dollar, a high inflation token is not going to preserve the value as, for example, Bitcoin, which inflation is so low. Then related with that, you have to know what a market cap is. I've talked about market cap, and actually the market cap it's the total value of a cryptocurrency calculated by multiplying its price by its circulating supply. So if there's 21 million Bitcoin circulating and they are priced on $100k, you just have to multiply 100k per 21 million, and then you will have total Bitcoin market cap. Then there are some terms you have to know, for example bullish and bearish, and they represent the market sentiment. For example, bullish means that people think that the price is gonna go up, and bearish it's actually the opposite. Now let's say that you have a basic crypto knowledge and you wanna go deep into some different tools that can be helpful for you to explore and search for new cryptocurrencies that are yet to be discovered. So I'll show you 5 tools that will be definitely so important for you in terms of crypto research. I'll go from the easiest to the hardest. So pay attention and please grab a paper and a pen, because you might have to take some notes. First of all, here we have market cap off. This is related to the market cap term I told you about in 5 minutes ago. For example, imagine that I invested on, for example, Hyperliquid, and I think that it has the potential to get to the top 10 market cap. So for example, I should choose one of those cryptocurrencies, like for example Cardano or Tron, which is the 10 cryptocurrencies in market cap, and here the page is gonna give me a representation of which price could have Hype if it achieves the same market cap as Tron Network. In this case, you see that Hype has a 12 billion market cap and Tron has 26 billion market cap. So for Hype to get Tron's market cap, it will need a 2.2x on its price. This is not the best tool for you. I mean, this tool will help you just to make a little bit of knowledge of which price can achieve some different coins. For example, there's a lot of people saying that XRP is gonna go to $10, but if you use, or even $100, but if you use this tool, for example, with XRP, and you put XRP here, let's see, you put XRP here and you put Bitcoin's market cap here, you'll see that, for example, and you can see here that, for example, for XRP to get $100, it should have 3 times the market cap of Bitcoin, which makes me think that it's maybe a little bit unbelievable, and definitely it's not gonna happen anytime soon. So be careful with this tool. It's not the best tool in the world, but it's usually so useful for you to compare different coins and for you to make like a certain image of which prices can get different other coins. Then on the second tool we have CoinMarketCap. CoinMarketCap, as I mentioned on videos before, it's one of the best tools you can use. You have CoinMarketCap and you have CoinGecko, which is actually here, and they are more or less the same page. The thing is that CoinGecko is decentralized and CoinMarketCap is actually owned by Binance. Okay, so let's use CoinMarketCap because it has no exchange owner here. So as you can see here, CoinGecko, it's definitely so useful. Okay, here we have the top cryptocurrencies leaderboard, and here we can search so easily different projects. For example, I mentioned about Hyperliquid, and for example, it can be used together with the market cap of page I mentioned before, because look at this. For example, I see that Hyperliquid is actually the 14 top cryptocurrencies in market cap. And then as you can see here, I can know which coins are actually on the top and I can compare them. Also, some good features that CoinGecko has is that you can actually build a portfolio here. So you can take notes of the coins you're actually buying or selling. So it will make tracking your investments much easier. So a really good page for you to get information. Then we've got different kind of assets separate on different categories. For example, if we come here, we can filter, for example, different coins. In CoinGecko, we've got many data. So I personally suggest you to come here and just start investigating a little bit. For example, we can check out the exchange, how they actually going, the volume they are actually doing, the trust score they have. Also with the NFTs, we can see here the total market cap of some different collections. We've got many different tools that are so useful for you. So in my case, I would suggest you to use CoinMarketCap, especially if you're trying to track your portfolio, if you're doing some research, because if you come here to cryptocurrencies and you go, for example, to Ethereum, as you see here, CoinGecko is giving us a lot of data about the market cap of Ethereum. We've got the full diluted value, the 24-hour volume, and a lot of data that, especially if you're starting out, this kind of data, it's so important for you to get in touch with the whole crypto ecosystem. So it's an easy tool and it's like the same on CoinMarketCap. As you can see here, it's actually more or less the same. Then we'll jump with my two favorite tools on the crypto space, and they are much advanced than CoinMarketCap. So I'm gonna make a little brief for you, and if you like this video and you give me a little bit of support, I'll be creating two videos specific for those tools, because I'm talking about DeFi Llama. Those are the ultimate tools for you to make crypto research analysis. So if you're gonna invest in crypto seriously, you must know how to work with those tools. Okay, so as I said, I'm gonna brief you a little bit on what you can get from them, and then if you like this video, I'll make another two with extended tutorial on how to use them. So first of all, we've got DeFi Llama. DeFi Llama is a tool that gives us the whole information we need about different blockchains. If you see here, it's giving us a little bit of data of everything, and I know if you're actually starting out, this tool might sound like Chinese for you. Okay, so I'm gonna be slowly explaining everything a little bit. So let's go in. First of all, in DeFi Llama, as its name indicates, it's giving us data about DeFi, okay, and also how chains are actually performing. For example, we can go here on DeFi, go chains, and see what's actually happening on chain. For example, you see here that in Ethereum, they saw a 24% increase in the inflows of total value locked. For example, we see also Solana, Tron, Bitcoin, Binance Smart Chain. This is not the same as market cap, okay, because you can see here that Hyperliquid is the top 10 on total value locked, but it's the top 12 on market cap, okay? So it's not the same. In this specific video, I'll show you and I'll explain you what is the total value locked and what it means, okay? Because it's not the same as market cap, and you can see a lot of times here that, for example, Bitcoin, it's the top 4 chains in total value locked, but it's by far the top 1 in market cap. So you might be wondering, okay, but why Ethereum it's the top 1 in total value locked and it's not the top 1 in market cap? Okay, that's what I will explain you in the next video, because if I start explaining you all these concepts, this video is this video is going to be too long, so don't worry about it. As I was saying, in this page you can get a lot of data on what's actually happening on different chains. For example, here we know the total value locked of Ethereum, how much stable coins are on this chain, the 24-hour DEX volume, 24-hour chain fees. That's interesting because you can know here how much money they are actually earning. For example, you know that Ethereum is actually making $2.22 million daily in fees, okay? So it's worth for you to understand how to use this page, and that's why I'll make a new video about it. In the specific video, we'll break down also the other different pages we've got here and also different other data, and I will also explain you how you can use that data in your investment strategy. So don't worry about it because we'll have many videos explaining everything. Then we know how to do analysis of chains. Now it's time to know how to do the same but with tokens, okay? Here we know what's happening on the chains. With DEX Screener, we know what's happening with the tokens, okay? For example, imagine that you're actually willing to buy a token on Solana. So DEX Screener, it's gonna show you the whole list of tokens that are actually running on Solana, and you'll get a lot of data of them, and you can also buy them because there are a lot of DEX that are not giving you the best data on different tokens. And I promise you, don't worry about it because I know that those tools in the beginning, they feel so messy and you think that there's a lot of data here, and you don't know what's actually happening, but don't worry about it, okay? I'll explain you, as I said, on another video. I'll make two new videos, one for DEX Screener and another one for DeFi Llama. So for example, as I said, let's go to the Hyper EVM because it's a little bit easier because Solana is like the top one in terms of complexity. So let's go, for example, imagine that we've got here the Alright Body token, which is a meme coin on the Hyperliquid ecosystem. And here you can see a little bit of data on the Body token. And with DEX Screener, you've got access to a lot of useful data. For example, who's buying, who's selling, top traders, who made more money, who made less money, if those guys that are actually making money, if they sold, if they didn't, where this money came from. For example, you can know here that this guy bought $3,000 on Body and they have an unrealized P&L of $23K. So for example, I can go here and know when he did the buys and the sellings, okay? Those are really useful tools for you to make on-chain investigation and also to know where to or where not to buy tokens. Okay, then we've got other information, for example, the volume 24 hours, how much people is actually buying, how much transactions, the liquidity, the fall delivery value, market cap, pricing in HYPE, in USDC, and a little bit of data on the contract for you to not get scammed. Okay, let's say that it's like CoinGecko and CoinMarketCap are easy tools for new people that it's actually joining new on the cryptocurrency space. But if you want to go in deep, you have to definitely use DEX Screener, okay? Because CoinMarketCap gives you a really good overview on different tokens. They give you a lot of data, but it's not enough for you if you want to go serious with that. So if you want to go serious with crypto, definitely you have to know how to use DEX Screener, because knowing how to use all this data that DEX Screener is showing you here will make you a much better investor, okay? So market cap off, CoinMarketCap, CoinGecko, DEX Screener, and DeFi Llama. Those 5 tools are definitely so important for you. And as I said, in the next few videos, I'll be making a tutorial on how to use DEX Screener and DeFi Llama. As I said, I could explain it here, but I'd need to make a 2 or 3 hour video for you to know how to use those tools correctly, because I'm not gonna make you a quick tutorial on how to use them because you're gonna get lost so easy. So those 5 tools, remember them because they are so important for you. So now you know more about which tools you should use for crypto, okay? But that's been for the on-chain data and everything you need to know about the research analysis. But now it's time to go for the technical analysis. Technical analysis is a vital skill for traders. So let's talk about how to set up your charts and use key tools like TradingView or CoinGlass for on-chain analysis. So let's go for it. So first of all, what you have to do is to set up your chart in TradingView, okay? For example, you come here to TradingView, and if you see here, I've got different many coins that I'm actually tracking. For example, Pepe Coin, Sei, Aptos, TIA, Ethereum, BNB, and different others. Here we have the Bitcoin CME features, and I have this here because, I mean, the Binance chart, it's actually drawn. So I'll be using the CME or Bitfinex, for example. It's actually clear. And the first thing you're gonna do is to set up your TradingView, and I'm gonna show you how to use it. First of all, we're gonna set up the same indicators that I have, for example. So for you that you are actually starting, you'll need two things: RSI and volumes. Okay, so you'll come here to indicators and you put here RSI, and you click here and it's gonna appear here. And then the second one, it's the volume. Okay, you put here the volume, and it's gonna be really useful for you because first of all, then when you put the indicators, you're gonna come here to candles, and then here you're gonna choose your favorite ones. On my case, I'm using candles as most of traders because it's like more visual and better for you. Okay, I just prefer candles. Okay, so now how to use volume and RSI. It's relatively strength index. Okay, so RSI stands for Relative Strength Index, and it's very useful indicator that tell us how strongly we are taking certain movements in crypto. Normally, what we look for with this indicator will be divergences that show us a decorrelation between the price and its strength. For example, if the price is going up and the strength is going down, we are likely to see a sharp drop. Likewise, if it's the other way around, we may see a big rise as here. As you can see here, the price was going down, but the RSI was going up. So this is a decorrelation that was showing us that the price was going down, but the strength was going up. So that a bullish run was probably. And as you can see here, the price was going up, and as you can see here, the price dropped from $109K on Bitcoin till $74K, which was a 31% drop. And we've got many different scenarios, like for example here price was going down and RSI was going up, exactly like here, everywhere. If you see a direct correlation on the price and the RSI, you have to definitely try to make a move because the price is gonna be probably moving with the strength. Then the volume serves to give us security in our movements. The volume of a candle means how much money has been moved and used in trading Bitcoin, for example, that day. As more volume means that more people have been intervening in the price. So the more volume, the more reliable is a movement. If there's a very large movement but very little volume, it's because very few people have been trading on that day. So making that movement was easier and therefore much less reliable because many fewer people have had to get an agreement to move the price. So, for example, if you see here that a lot of people has been trading, those movements are much more reliable. So if you take a look at here, for example, those movements have been more reliable than those ones, okay? Because here much more people was actually trading Bitcoin. So for example, you see here that to make that movement this day, they needed 3,000 Bitcoins to make that movement, 3,000 Bitcoins in volume, which is a really large amount of money. But for example, here there was just 700 Bitcoins to make that movement. You have to keep in mind that this is just the order book for Bitfinex, but this is a really good. So for you, it's so important to understand how to use RSI and volumes to make your technical analysis, okay? So be sure that have them activated because you will need them in your future operations. Now let's jump into another tool that you've probably heard of, and it's so important. If you heard the term Fibonacci thrown around in trading circles and wondered what it's all about, you're in the right place. Fibonacci in trading refers to a set of tools based on the Fibonacci sequence, a mathematical series where each number is the sum of the two before it. Okay, this might sound really cool, but how we can use it for trading? Well, here in trading, we've got two different tools that use Fibonacci: retracements and extensions. These tools will help us identify the potential of a support, resistance, and price targets in the market. So let's break it down. If you see here in this XRP chart, I'm actually using the Fibonacci retracement. So let's erase everything and I'm gonna show you how to use it. First, you have to know that Fibonacci retracements, they are horizontal lines that you can draw on a chart on key percentage levels. There are different 23.6, 38.2, 50%, my favorite one, which is the 61.8 and the 100%. These levels come from the Fibonacci sequence and they are actually used to spot where the price might reverse during a pullback. Imagine stocks being climbing in an uptrend, but then it starts to dip. Where will we stop falling and bounce back? That's where retracements come in. For example, if the stock drops to the 38.2% or the 50% retracement level, traders often see these as potential support zones. So those zones are great spots to consider buying in a downtrend. So how do you actually use this in trading? Here's a simple and practical guide. First of all, we have to identify the trend. For example, let's say here the trend is that Bitcoin is going down. So this is in a downtrend. So if it's in a downtrend, we have to use a Fibonacci retracement. So let's use it here, from here to the bottom, okay? So here you can see that Fibonacci is giving us some key certain levels that are so useful, okay? So you make this little movement and this is like magic. It's giving you the best levels for you to buy and sell. But don't rely on Fibonacci alone. Pair of it with other tools like moving average or RSI to confirm these key levels. When multiple signals line up, then that's your sweet spot. For example, take a look at this. Imagine that you were on April 2025, you take a Fibonacci from the all-time high to the low of 74k, and you're actually here. So you use the Fibonacci retracement and it's gonna give you some key levels. Let's say that here we've got many different points that are good for Bitcoin, and we see that RSI is actually going up in an uptrend. So maybe here on 0.38 it's a good moment for buying, because this was here acting like a resistance, but when it breaks down it's gonna be a support. So if the price actually goes down, those levels here, and here, those are good points for you to buy Bitcoin, because the price it's probably gonna be stopping here. Just look at this. Bitcoin went up and stopped on the 0.78. Bitcoin went up and stopped on the 0.61. Those are the key levels, the 0.78 and the 0.61. Those are my favorite levels and they are so useful for you to make buys. And also the Fibonacci retracements are gonna give you some good take profit places. For example, if the Bitcoin goes still going up, maybe this point and this point could be a good moment for you to sell your Bitcoins, because probably the price is gonna go down just right here. So now I'm gonna use the Fibonacci extension on the past to see if the tool was actually a reliable tool for you to use on that trading. So imagine that we're using this Fibonacci extension. We are on May 2024 and we use extension from January 2024 to March 2024. We put it here. So let's see if it was a reliable tool for you. I think that it is. I mean, just take a look here. If you were on March 2024 and you used that extension, the Fibonacci tool was giving you a really good point to buy, sell, buy, sell, sell, buy, and here maybe selling. Okay, so if you take a look at here, you'll see that Fibonacci often it's like magic. Okay, so let's use it, for example, on the last bull market to see, for example, which prices this is gonna give me, and let's jump into this video in the next few months and see if it was useful this time. So let's take, for example, from here, October to the all-time high. Okay, this is giving me these two targets, okay? This is giving me these two targets. And if you take a look at here, it's been also here a good point for buying here as well. and as you have seen, this is like magic, man. So by mastering Fibonacci retracements and extensions, you're adding powerful tools to your trading toolkit. They will help you making smart decisions, whether you're jumping into a pullback or crashing out a peak. So next time you're analyzing a chart, give Fibonacci a try, please. It might just take your trading to the next level. I don't want to make this video too long, but if you want to know more about how to use TradingView, we've got many different tools here, and here that can be useful for you if you want to go deeply into your trading analysis. But for me, I just need these three tools: Fibonacci, RSI, and volume. With that, you can do everything. You don't need a lot of indicators. I know a lot of professional traders that are not using a lot of tools when it's time to trade, just one or two. I think that the volume, RSI, and Fibonacci are the ones that, in my case, are the favorite. But I don't like using patterns or a lot of indicators because this is gonna be making your trading much messy and difficult to understand. So make it clear, more visible, and easy for you to understand, because a lot of indicators is gonna make your trading worst. Then here we've got another tool that is actually so important for you, which is CoinGlass. Okay, CoinGlass is like an on-chain analyst tool that is gonna give you a lot of data, so important for you to know when to buy or when to sell Bitcoins. Okay, for example, let's come here and we've got many different information. As I've said, with Dex Screener, TradingView, and DeFi Llama, I can be making a huge analysis on how to use these tools specifically and explaining you each different category, because there's a lot of information here to be discovered and to be understand. Okay, but for example, here we've got different information. For example, the amount of people that it's actually trading, the liquidations that are actually being done on the crypto market, and then here, for example, we've got information on how the Bitcoin ETF is going. We can see here the amount of Bitcoin that is being bought. The same with the Ethereum ETF. We can see here how much Ethereum is being bought, who's buying this Ethereum. Those things are definitely really useful for you to understand what is actually happening behind the chart. Okay, because the chart, it's being pushed by this kind of information. So if you're actually taking these things seriously, you definitely need to know how to use these kind of tools. Then there are two ways to make money in crypto: investing and trading. Investing involves holding assets for over a long time, aiming for long-term capital gains, for example buying Bitcoin when it's at its mining cost floor and selling near the mining cost ceiling, then repeating the cycle and taking amount of gains. Then trading is a short-term focused on swing or intraday trades, for example buying dips using trend lines and Fibonacci levels on a 3-minute chart, 15 minutes, or even 4-hour chart, and aiming for a 3x return in 20 minutes. Each approach has its own very different risk profiles, so choose based on your financial goals and risk tolerance. On my case, I use both. I think that the best case for you is to know how to use both tools and different ways to earn money in crypto. So this is gonna make you a really better investor, because you know how to act when the price is going down, when the price is going up. You know how to do anything, and that's important. So now you have to know that there are two main ways to make money in crypto: investing and trading. Investing involves holding assets for over a long time, aiming for long-term capital gains, for example, buying Bitcoin when it's at its mining cost floor and selling near the mining cost ceiling, then repeating the cycle. And then there's trading, is a short-term focusing on swing or intraday trades, for example, buying dips using trend lines and Fibonacci levels, as I shown, on a 3-minute, 15-minute, or 4-hour chart, aiming for a 3x return, for example, in 20 minutes. Each approach has its own very different risk profile, so choose based on your financial goals and risk tolerance. On my case, I use both, because this is gonna make you a better investor if you know how to act in different scenarios. If you know how to trade in volatility scenarios, in a short-term period of time, it's gonna make you a really good trader. But if you also know how to do long-term investments, this is also gonna make you a more complex investor and better for you, because depending the price action, you're gonna adapt your strategy, and this is gonna make you far better and of course more profitable. Okay, so imagine that you've seen all this long video and you're actually decided that you want to buy crypto, you're gonna start investing or start trading, or you were already doing it but you want to buy more. Okay, so to start buying and selling crypto, you need to know about on-ramps and off-ramp platforms. On-ramp convert fiat currencies into cryptocurrencies. Platforms like Bluffin allow you to link your bank account and buy crypto directly. For example, in Bluffin, you can link your bank account, but you can as well buy crypto directly with your card. And then also, for example, with Bluffin, in the off-ramp side, you can convert crypto back to fiat, and similarly, you can sell your crypto on exchanges and withdraw it to your bank. This is so useful, and you have to know that it's possible, because I've been investing in cryptocurrencies for 6 years, and the most common question about my work is, okay, but Joe, you can actually withdraw this money to your bank account? You can use this money? Of course, man. You can use it in different scenarios and many different ways. You can actually use a crypto card that is actually useful. You can just pay with your crypto. You can withdraw crypto using our RAM platform, like in this case Bluffin, to your bank account and use it with your MasterCard, Visa, in any other bank. There's an infinite ways to use, buy or spend your cryptos. So imagine that you use the on-ramp section and now you bought cryptocurrencies. So then you have your money on Bluffin. So on trading, you can choose between spot trading or derivatives. And this is gonna be important, okay, because this is a new world for you all. So let's say that in the both ways you've got for investing, you decided that you want to go for trading. So for trading, as I said, there are two ways: spot trading and derivatives. Spot trading, it's easy, it's buying and selling the actual cryptocurrencies. But derivatives are much different. Trading futures, derivatives, or options, they allow you for leverage, but they carry higher risks. And here I'll take a little bit of time on explaining you how they work, because in this channel we will take a lot of time talking about futures. Crypto derivatives are financial contracts that get their value from underlying cryptocurrencies, like Bitcoin or Ethereum. They let traders to bet on the price movements of these assets without actually owning them. I'm just gonna mention the three most common types. Futures, that are deals to buy or sell cryptocurrencies at a set price on specific future date. If the price moves in your favor by then, you make profit. Then we've got options that gives you the right, but not the obligation, to buy or sell cryptocurrencies at a certain price before a deadline. They are flexible for betting on prices or protecting against losses. So options are so professional, so good for stocks market, but the options on the crypto space are not that developed. It's maybe gonna be the future, but not the present. And then we've got the perpetual contracts. This is the most common one you've seen on different exchanges. They work like futures, but they don't expire. You can hold them as long as you want, with funding rates keeping their price close to the actual market. With perpetuals, for example, you're not exactly buying the cryptocurrency itself. Instead, you're entering a contract tied to its price. For example, if you think Bitcoin price is gonna rise, you might buy a futures contract. If you're right, you'll profit based on the price difference without ever holding a Bitcoin. It makes no sense, right? Well, leverage is a big part of it. You can control a large position with just a small amount of money up front, and you cannot do it on spot. Here, leverage increases the risk, but also potential gains equally. And there are different ways to take money using perpetuals or futures. First of all, leverage, as I said, lets you multiply your exposure. For example, with 10x leverage, for instance, a 1% price jump becomes a 10% gain. It's a way to make big profits with less capital. But as well, a 1% price down becomes a 10% loss. So be careful because it's risky. Now with the hedging, if you own crypto and fear a price drop, you can use derivatives like a put option to limit your losses. It's like insurance for your holdings. I'll make a specific video about hedging. And then there's the arbitrage. You can take advantage of price grabs between markets or exchanges, locking in profits with a little risk. That's a bit advanced, and I'll explain you in the future, but now it's not what I'll be focused on. While this sounds really great, before jumping into futures you have to know that they are tricky and risky, and as I said in previous videos, cryptocurrencies and the whole markets are a zero-sum game where everyone wants you to lose. And while futures is the easiest way to win, it's as well the easiest way to lose all your money, so be careful with that. Then if you buy in spot, you have to know that there are two ways to storage your cryptos. We've got hot wallets like MetaMask for EVM compatible chains, or Phantom for Solana, which are convenient for frequent transactions. It's so easy to use them, and as well I can make a tutorial in the future. But then we've got the cold storage. Those are hardware wallets, like in this case this Ledger, which are more secure for long-term storage. This is like a pen drive, and if I want to make a transaction I have to put it on my laptop and give my authorization here if I want to move any single dollar. As you can see here, if it's not plugged, it's not working, so it's 100% offline, and no one can steal any single dollar from my account if this is not plugged into my PC or laptop. So if you're actually holding more than $10,000, I suggest you to make a small investment of $70 to buy a Ledger, Trezor, or different kind of storage, but definitely you should have one of them, because you have to know as well that in the crypto space there are tons and tons and tons and tons of scammers that are willing to take your money from them. I even got robbed by $10,000 the past year, so be careful, because there are a lot of scammers and you might think that you're invincible, but then there's someone that comes, they steal your money, and you're looking everything from your sofa like a clown, looking how someone stole your money. So be careful with that. Finally, tracking your investments is crucial. Tools like CoinMarketCap or CoinGecko Portfolio allow you to log your buys and sells to track your profit and loss. This is gonna be good for you if you're actually investing in the long term, but if you're trading, you have to as well track your operations to, first of all, to know from your losses and to track your wins, because this is gonna make you far better trader, because you can learn from your past. In my case, I use CoinGecko Portfolio to track all my investments, but when it's time to trading, I use this. This is a book made by Bluffin that is gonna help you doing the tracking of all your movements on crypto. As you can see here, each page means one day. For example, I start my day and I will be writing what I'll be doing today, a little bit of outlook of what's actually going on the market, what's my main goal, this is for the morning and this is for the night, to know what I've learned this day. At the beginning it's difficult, but you have to feel everything, and when you finish writing everything on this book, you have to take a look on which ones have been your mistakes in the past trades. I definitely think that since I started trading, this is the best tool I've ever got to record all my tradings and to also record my losses, my wins, and to know how to take profit from them. And I have a good news for you. If you're on my community and you want to start trading, or you've been trading for a long time ago, or you just like how I make videos, if you sign up on Bluffin, you'll be on a bundle of one of them, okay? This is packed and this is gonna be for one of you. So as I said, I have one of them for you. So if you wanna win it, you just have to register on Bluffin using the link in the description below, and you're gonna get a 10% cashback on your deposit on crypto, and you're gonna be in the bundle of one of these. I'll be giving away more of them in the next few videos, but this is just for the OG ones. So if you want this trading record book, just sign up on Bluffin and comment on this video, and I'll be picking one winner in the next few weeks. So thank you so much for watching me. Don't miss the exclusive opportunity on Bluffin to get a 10% cashback and this trading record. I'm Joss, and see you in the next video.